Hello everyone, welcome to ACCA P6 UK lectures brought to you by AccountancyTube.com. We have finished our inheritance tax in one of the previous videos. But there was one small topic left, which we just left, which is not given in our lecture notes as well. That is quick succession relief. Now, if you go to page number 74, I think. Page number 74 of your P6 lecture notes, please. Let me also open that. Page number 74, I think. Page number, just wait 1 second. So it's page number 74, yep. So page number 74 of your lecture notes, where it says death tax on death estate. Now in the step 3, if you read the step 3, it says any part of the death estate covered by the nil rate ban is at the rate of 0%. Any part of the death estate not covered by the nil rate ban will be charged at the rate of 40%. Deduct relevant reliefs from the death tax, e.g. quick succession relief. It's not quick session relief, it is quick succession relief. There is a typo. Alright, so quick succession relief, which we are going to see now. So we know that it will reduce our death tax. Alright, so that's what it says in the notes on page number 74. That the tax will be charged at the rate of 40% and deduct the reliefs from the death tax. So quick succession relief will be deducted. So what is quick succession relief? Now sometimes what happens is that if one individual has transferred an asset to his son today, if the individual has transferred an asset to his son today and he died. Now when he died, of course the son will have to pay tax on that. Now a couple of years later, so say for example 2 years later, that son died as well, and the same asset is eventually transferred to his son. So that son, I mean the grandson of the eventual donor, will also pay inheritance tax on the same asset. So what I mean to say is that the same asset is being transferred twice, and the inheritance tax is being charged twice on the same asset. Now if a situation like that arises, the quick succession relief will be given, which will reduce the eventual tax liability, inheritance tax liability. Alright? Now that happens within the families normally. So when a grandparent has transferred his son to his, the grandparent has transferred an asset to his son, and then that son has transferred to his son upon his death. So the tax is being charged twice. In that case, a quick succession relief will apply. Now there is a time span. If the inheritance tax is being charged twice within 5 years period, only then the quick succession relief will be applied. However, if it is more than 5 years, then the quick succession relief will not be able to help us. Then the full amount of inheritance tax on death will be payable. Alright, now how to give the quick succession relief? So that is a formula basically, not OCR, OSR, it is quick QSR. So quick succession relief will be inheritance tax on the first death. Now first death means that when the first donor, when he made the gift, so that is that death. So first death means the person who gave the gift for the first time when he died. So how much was the inheritance tax on first death? Multiplied by the percentage. Now what is that percentage? The percentage is given here. So years between two deaths. So how many years are between two deaths? So if it is less than 1 year, then the quick succession relief percentage will be 100%. Likewise, the more years you go on, it will reduce by 20% in every next year. So if they are less than 2 years, then it will be 80%. If they are less than 3 years, then it will be 60%. And less than 4 years, it will be 40%. Likewise, if it is less than 5 years, then it will be at the rate of 20%. And I know when it will be less than 6 years, which means more than 5 years, so in that case, quick succession relief will not be applied. So it will be at the rate of 0%, which means it won't be applied. Alright? So that is basically the difference between two deaths. So if it is less than 1 year, then it will be 100%. If it is less than 2 years, means more than 1 year but less than 2 years, it's 80%. Likewise, it will reduce every year by 20%. Now these percentages won't be given to you, so you just have to memorize these percentages yourself. So if you just memorize for the first year, so if it is less than 1 year, it is 100%. Likewise, it will keep reducing by 20% every year. And we know that limit is 5 years. So if it is more than 5 years, the quick succession relief will not be able to help us, right? So let me write it a parallel to that one. Right, so that's how we calculate the inheritance tax, quick succession relief on death tax. Now I've just listed down a small example here, which we will do now. So I will just read out to you a laptop. So laptop basically the name of the person. I just made up the names because I don't want to give a name. So just in case if it is my student if that is the name which I give here, if you are that person, so I will say that person is dying, you might not like it. So that's why I've just made up a name, laptop. I assume that there won't be any person with the name of laptop. Right, so laptop died on 31st of July 2017, leaving an estate of £340,000. In November 2013, laptop inherited £28,000 from a family member. Now just read the first line here. Now laptop is a person who died on 31st of July 2017. Leaving an estate of £340,000. So he left £340,000 of death estate. Now in this estate there is an asset which was transferred to laptop, which was taxed at that time. Alright, so let's see. In November 2017, laptop inherited £28,000 from the family member. IHT of £75,000 was paid on chargeable estate of £450,000. Now when that person, that family member, the name is not given and relationship is not given as well, so it's basically one of the family members. So when family member was died, there was a total chargeable estate was £450,000, on which the total IHT was paid £75,000. So that was total, and in that amount there was £28,000 of that gift as well, which was inherited to laptop eventually. Now IHT of £75,000 was paid on chargeable estate of £450,000 upon death of the family member. Required calculate IHT on laptop's death. So what would be the IHT on laptop's death? So first of all we have to see the chargeable estate of laptop. So chargeable estate, and it is how much? £340,000. Right, so that is the chargeable estate of a laptop, which is given to us in the question. Now that is £340,000 chargeable estate. Now we have to calculate the inheritance tax on that, because it is a death estate and it is a chargeable estate. So we'll have to calculate death tax on that. Now if we calculate IHT on that, so we'll take £325,000, which is the nil rate band, at the rate of 0%. So that is our nil rate band. So it will be at the rate of 0% up to £325,000, and the remaining £15,000 will be at the rate of 40% because it is death tax. So shall we deduct the £340,000 less 325? So it is at the rate of 40%. We know that it is amount is going to be £15,000. So that £15,000 at the rate of 40%, which gives me the total of how much? £6,000. So that is basically £6,000, right? Now inheritance tax is £6,000 on the chargeable estate of £340,000, right? That is the inheritance tax for laptop. Now this death tax of IHT, this death tax of £6,000 will be reduced by the quick succession relief. Now we'll have to deduct the quick succession relief. Now why quick succession relief will be applied? Let's see the difference between the two deaths. Now the same asset is being taxed twice. So that's in order to avoid the same asset being taxed twice. In order to avoid that, we are giving the quick succession relief. Now see the difference between the old death and the new death. So the new death is on 31st of July 2017. Where the first death was in November 2017. So how much is the difference? So 13, 14, 15, 16, 17. So it is, if we take November 17, it is less than 4 years, and for percentage for the less than 4 years is 40%. All right, so we'll apply the 40%, but we'll have to see the inheritance tax on first death. So we'll have to calculate that as well. So let's see. Let's quick succession relief. Let's queue quick succession relief, and I will do the working one. So quick succession relief, let's do the working one here. That is basically quick succession relief. Right? So quick succession relief, so we'll have to see that how much was the tax paid on that same asset. We don't know, because the asset was £28,000, but we are given the total amount of inheritance tax on the total estate. So we'll have to see how much was the percentage, then we'll apply the same percentage on that asset. So let's see, amount of tax which was paid was £75,000, and the total chargeable estate was £450,000. Multiplied by, so it will give me the percentage of inheritance tax on the total estate. So I will apply that percentage on that asset, so that is £28,000. So it will give me the inheritance tax which I paid on that estate, on that asset. Right, so I hope that you can do it. So please do it on the calculator. 75,000 divided by 450,000 times £28,000. Let me do that on the calculator as well. So anyway, whatever the figure of this amount is, that will be our tax paid on that old asset. Right, so we will take that amount tax paid on the old asset multiplied by the 40%, which will give me the quick succession relief. Right, so let's do that. 75,000 pounds divided by 450,000 pounds times, so that's going to be 4667. Right, so that is the amount of inheritance tax paid on first death. Right, now we'll have to apply the percentage on that. Now the difference, as I said to you earlier as well, the difference between the old death and the new death. So the old death was in November 2013, so 13, 14, 15, 16 and 17. Now if we see it is November 2013, and if we go to November 2017, it would be 4 years, but it is 31st of July 2017, so that it is less than 4 years, and the less than 4 year percentage is 40%. So if we apply a percentage of 40% on that, that would give me the quick succession relief of how much? Let's see on the calculator, this one as well. So that is a 4667 times 40%, that is 1867. So 1867, so that would be 1867. The quick succession relief will be deducted, and if we deduct this amount out of the £6,000, that is 4133. That is the inheritance tax on death. Right, so that's how the quick succession relief works. Right, now if you want to note down this this thing on the board, please do so now. Right, so just quick revision, quick succession relief will apply when the same asset is being taxed twice within the family. So when one asset is transferred by one individual to another individual, and upon the death of the first individual, and the second individual who received the asset is also died within 5 years, then quick succession relief will be applied, because we don't want to get it taxed twice. So that's why the quick succession relief will be applied. So the more the more difference between the old death and the new death is, the quick succession relief will be of lower amount, because the percentage will reduce. This percentage won't be given to you in the exam, so that if the difference is less than 1 year, which is the least amount of difference, it will be 100%, and every year it will increase, it will reduce by 20%. Right? So, and just make sure you note down this formula as well. That will be applied on the questions. Right, so that's it for this video. Actually not end of this video, we'll have to do another thing as well. Now if you could come to please page number page number 78 of your lecture notes, please. Page number 78, that is trusts, chapter number 21 of P6 lecture notes, and it is trusts. Right then, chapter number 21, trusts. It says, first of all, inheritance tax charge on discretionary trust. Now, there will be a charge whenever we transfer an asset into a discretionary trust, as long as it remains within the trust, within the discretionary trust. There will be annual charge every year. Now, there are two kinds of charges which will be applied. One is a principal charge, another one is an exit charge. So let's see what are these. The property in the trust is known as a relevant property so long as it remains relevant property. Is subject to the principal charge on every 10th anniversary from the start of the trust. If relevant property leaves the trust, there will be exit charge applied on that. Right? So there will be principal charge on every 10th anniversary as long as it remains within the trust. So IHT charge on the value of the property in the trust at each 10th anniversary of the trust. The IHT principal charge rate is 6%. Now 6% is 30% of the day of the lifetime tax. Lifetime tax rate is 20%. And if you take 30% of that, that will be 6% of the value of the property in the trust at the 10th anniversary. So when the 10th anniversary arrives, there will be principal charge. So if the property or an asset is within the discretionary trust, on every 10th anniversary, there will be a principal charge. However, if the property leaves the trust to the eventual owner, then there will be exit charge. Now, it depends on when the property is leaving. If it is leaving after 10 years or before 10 years. Now, if it is leaving before 10 years, so let's see what the exit charge will be. Exit charge before first principal charge. If the relevant property leaves the trust before 10 years of creating a trust, then the exit charge of 6% will be applied. So it will be exactly the same like principal charge. Right, and after that it says the exit charge after the principal charge. So if the property leaves the trust after the principal charge, then there will be 6%. 6% will be applied on the value of the property. So it will be 6%, which is 30% of the lifetime rate of 20% of the value of the property, but it will be reduced by a fraction. So what is that fraction? That reflects the time elapsed since the 10th anniversary. So the fraction would be x over 40. Now x means how many quarters has it been since the first 10th anniversary, right? So it will be reduced by that amount. Now all of them are perfectly fine. So the first one is principal charge. So that would be 6%, which is 30% of the lifetime tax rate of 20%. So 30% of 20% is 6%, so that will be applied on every 10th anniversary as long as it remains within the trust. If it leaves the trust before 10th anniversary, again the treatment would be exactly the same, 6%. However, it will be called exit charge. However, if the property leaves after 10th anniversary, then we'll have to see that how many quarters are these more than 10th anniversary. So after 10th anniversary, say for example 10 years has been elapsed anyway, and the property is leaving after 12 years. So after 10th anniversary there was a principal charge. Now there are 2 more years as well, right? So in 2 years, how many quarters are there in 2 years? In 1 year there are 4 quarters, in 2 years there will be 8 quarters. So we'll take the exit charge, 6% of the property, then it will be reduced by a fraction. So fraction in this case, assuming it is 12 years, so 12 years means 2 years more than 10 years. So in 2 years, as I said, there will be 8 quarters. So that will be reduced by 8 over 40. All right. So X means quarters since the 10th anniversary. All right. However, you do not have to worry about the calculation bit. Examiner said it will not examine this thing in the exam as far as calculations are concerned. Right, after that, just beneath that is the stamp duty. And stamp duty is very often examined, and it's very, very easy as well. So just make yourself comfortable with it because it is very, very often examined, and it's very, very important. Very easy as well. Transfer of shares through stock transfer form. Now, stock transfer form is a physical form which you have to fill in, which you'll have to tell that who is transferring, who is buying, how many number of shares, what is the price, and all these details. if you're doing through the stock transfer form, are charged to a stamp duty of 0.5% of the consideration, the duty is rounded up to the nearest £5. That is important bit. So whatever the figure is, it will be rounded up to the nearest £5. It is payable by the purchaser, so purchaser will pay it. Now the example is given. What is the stamp duty on the shares sold at a value of 5769? What is the value of the stamp duty sold at the price of 5,769? Now if we apply 0.5%, it would come to 27 or 28 pounds. However, we will round it up to the nearest £5, so that's why the answer is £30. Right? After that, stamp duty reserve tax. Right? Now stamp duty reserve tax applies. Stamp duty reserve tax will be applied on transfer of shares electronically through the electronic system called CREST. Now there is an electronic system, though the previous one was a physical form. Now this is an electronic system which is called CREST. Now CREST basically is a central security depository, so which is a body which holds the shares within the UK. So they hold normally the UK shares and the Irish shares as well in some cases. So basically that is a central depository, central security depository. We calculate the tax on that anyway, so it will be again at the rate of 0.5%, but this time we will not round it up. All right, so this time 5,769 and 0.5% of that would be 2885. So this time we haven't rounded it up, so it will be exactly the same amount. After that, it is a stamp duty land tax. Now stamp duty land tax applies to the land transactions. The transaction is a transfer of land or an interest in land, so it's generally payable as a percentage of consideration paid for the land. It is payable by the purchaser and it is paid within 30 days of the transaction. However, if you are late excuse me, then the interest will be paid. Now the rate on non-residential residential property are different, and the stamp duty land tax will be calculated according to the bands which are given here. So these are basically the bands. It will be calculated, the tax will be calculated exactly